Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 23rd through December 27th. We're in part one of our weekly trading game plan. We'll try to help you make money trading the December 2024 federal interest rate decision. So we'll look at what that decision, that Federal Reserve interest rate decision was, their new summary of economic projections, their new dot plot, and again, how we can make money trading given all that information about the December 2024 federal interest rate decision. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for December 23rd through December 27th. We keep our notes in publicly accessible Google documents. Our notes Google documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas, etc. You can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weekly trading game plan notes documents, and you can find a direct link to that Google Drive folder also in the description box below. Welcome, Fairchild. Hope you had a great trading week and are doing well. Thank you for joining us. So firstly, we'll look at how the markets ended up on Friday. See, we had a strong rebound, a lot of volatility in the markets after that Federal Reserve December interest rate decision. We got a dip down, strong dip down, we'll see, and then a rebound on Friday. So the Dow ended up 1 point, almost 1.2%, NASDAQ up 1%, S&P up almost 1.1%. At 73% advancing, 24% declining. We've only had 15, 16% new highs, 84% new lows. We've now only got 30% above their 50-day moving average, 70% below, and we've now got more below their 200-day, just a little over 50% below, less than 50% above. So although we got that strong rebound on Friday, showing very bullish, under the covers, the markets are degrading, trending down. Again, strong rebound in the Mag 7, the FANG stocks, and not unexpected. We have talked, and we'll talk about that. Got a correction in Tesla. It had a run up, a little correction in Walmart. But again, almost all the sectors positive, a little correction in Meta. Look at the news, Tesla, big year. Forget the market tumble. Fed made the right move. In my humble opinion, I disagree. U.S. Congress, so they avoided the shutdown. Rally after inflation data, but closed lower for the week. Dow nearly 500 points higher on cool inflation data. Again, we'll look at that data that came out Thursday, Friday. Welcome, Gabe Fade, Ketan. Thank you all for joining us. Hope you're doing well. Crude bounced back up over 70 and then retraced below 70. So we still got that resistance point at about 70. It's just kind of oscillating around 70 right now. Natural gas finally broke that 350 level, so it's trending upwards. Now it's got support at 350. Gold broke down now below that 2650, had a strong bounce off 2600. So now the range is kind of 2600 to 2650. See all the futures for all the indices currently pointing up. Treasuries made a really strong bounce up in yields after that December federal interest rate decision. Retraced a little bit on Friday. Again, my humble opinion, I think that bounce up. Now we've got the 30 at 4.7, a little bit overdone. So again, 30 years now at 4.7, 10 years at a little over 4.5. And the 5 years, so almost 4.4. So again, right after that interest rate decision, as we'll see, bond yields spiked up, prices spiked down, and we did get a slight correction back on Friday. Bitcoin did break down below the 100,000 mark, so now we've got 100,000 at resistance level. We'll see if it continues down. I think the low recently was near 95, so trending down right now. So we'll look at a breakdown of each of the indices and the technology components. Again, you can access these screeners in our notes, also in the screener sheet in our ETFs and watch list Google Sheets. So if we look at how the indices reacted to that federal interest rate decision, and the biggest reactions are in the interest rate sensitive sectors. So IWM dumped, broke down outside its channel, made a new lower trend line. It's down below its 50-day, still got some room above its 200-day. Again, in my humble opinion, again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. Again, your interest rate sensitive sectors, I think, are going to continue to get hit going forward. So IWM did rebound a little bit on Friday, but more potential downside. And again, Russell small caps much more susceptible to higher for longer interest rates. The Dow was on a downward trend, plummeted on that interest rate decision, did rebound a little bit on Friday, but again, a lot of potential downside. Might get some support at 420, but then again, a lot of potential downside in the Dow, still far above its 200-day moving average. S&P not as big a negative reaction to that interest rate decision, but we see that strong negative reaction, broke down below its trend line. Then on Friday, tried to recover that channel. Again, a lot of potential downside. It looks like it, got support at that previous low, broke down on Friday a little bit more, and a lot of potential downside in the SPY as well. Qs, again, bounced down, didn't quite reach its 50-day, got some support, bounced back up into its channel, but now it's on the lower trend line, not quite as much downside in the near-term Qs. Look at a breakdown of the technology components. Again, here we'll see, this more strongly correlated interest rate sensitive sectors got hit harder. So your growth stocks, your biotechs, see that strong plummet in ARK-K, negative for growth stocks, also very negative for biotech. So we see biotechs broke down below its lower trend line. I don't know if it quite reached that previous low, but probably got some support there. Did rebound a little bit on Friday, but again, very negative for biotech. So I think further downside in biotech's LabU. Again, you trade these short with LabD, trade the bounces with LabU. Semiconductors didn't react, nearly as strongly, so they bounced down to their trend line a little bit below. It's just pretty much hugging that trend line. Again, not as sensitive to interest rates. TQs just leveraged on the Qs. Broader technology, again, pretty strong negative reaction to the interest rate decision, broke down below its 50-day moving average. Now that will provide some resistance. What was this lower trend line? Also providing some resistance, probably get some support from its 200-day, but again, some further potential downside in broad technology. So we're trading that with TECS, the leverage short on technology. You can trade the bounces with TECL. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. It's a good recommendation from Katon, pairs trading. Good way to manage the risk. So you can pairs trade these various leveraged ETFs, other ETFs, etc. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. Had a great trading week. So let's look at a breakdown of the groups, sectors, industries from last week and this month. So we see Friday got a strong rebound in real estate on that correction in bond yields. Utilities, technology rebounded. Only defensives were negative on Friday, but for the week, We're very weak in real estate, basic materials, energy continues to be weak. Technology, the least negative for the month. Technology and cyclical, slightly positive. Communication services, again, my humble opinion, mostly the Mag 7s. Financials, slightly negative. So we're, in my humble opinion, we're seeing some correction now. The financials had been running strong. Industrials had been running strong. Starting to see some correction in those segments. They kind of rolled over. Again, very negative for real estate. We'll talk about that. Energy continues to be very weak. At the industries, so again, a lot of bouncing from Friday. Again, solar corrected, although again, the interest rate decision, very negative for solar. Solar very sensitive to interest rates, so I expect downside in solar. Positive for the REITs on the interest or on the bond yield correction. Gold rebound a little bit on Friday. Copper rebound. The only negatives on Friday were trucking, coal, uranium. I want to just pop open the uranium one quickly because I think we're seeing, a rollover trending back down in uranium. So I've been keeping an eye on that. It seems like they're cycling down. And when they come back down, we'll be looking at opportunities again in uranium using DNN, LEU, UROI. I know some people like CCJ. So again, I'm watching that roll over in uranium, waiting for a bottom again, and we'll swing those back up and make some money again in uranium. For the week, you can see very few industries were positive, just some retail. REITs pretty negative. Again, interest rates are going to be higher for longer, negative for real estate, negative for REITs. And solar negative, uranium negative for the week. Silver, steel, basic materials generally negative, oil, coal very negative. So for the months, mostly retail positive, some REITs for the month, some REITs negative for the month. Farm products pretty negative, gold negative, copper, oil, steel. So all your basic materials, energy, and again, REITs, real estate, very negative for the month. Okay, let me grab a quick drink and we'll go through the economic data, look at the Federal Reserve's December 2024 interest rate decision, look at their comments, etc. And then the upcoming economic data for next week. Just a quick reminder, as soon as this important economic data, important economic news comes out, I try to capture it and post it in the Surf the Markets channel of our Discord. Our Discord's free to join. We'd love to have you join us in our Discord. Great way to get real-time economic data, real-time economic news. And also you can discuss all topics related to trading 24/7 in our Discord. So again, as the important economic data comes out, I try to capture a screenshot from investing.com, the raw data. Also important economic news, as that comes out, post that in the Surf the Markets channel of our Discord. So again, a great source for real-time economic data, real-time economic news. And again, we have all kinds of channels where you can discuss all different styles of trading, trading different asset classes, etc. So again, we'd love to have you join our Discord, actively participate, help each other make money trading. So let me grab a drink and we'll go over the highlights of the economic data from last week and then what's coming up for next week. Okay, not a whole lot Monday, Tuesday, and Wednesday. We got the Federal Reserve's December 2024 interest rate decision. So this is part of, well, we'll talk about the decision first, which was a cut of 25 basis points, pretty much as expected. We looked at the probabilities last week. Again, this was pretty much a given that they were going to cut 25 basis points. Again, my humble opinion, I think they kind of painted themselves in a corner and kind of had to do that cut, even though, again, as in my humble opinion, as I expressed last week, I don't think they should have cut. And we're going to see that in their inflation projections as well. So again, they cut by 25 basis points. You can see though that they lowered the rate of cuts going forward. So previously, a year from now, they were expecting it to be 3.4. Now it's only 3.9. So essentially, they're only forecasting two more cuts in 2025. It was up to four. Market, I think, had projected even higher, up to maybe like six or so. So many fewer cuts, a much shallower curve of rate cuts going forward. Get very negative when we'll talk about this in the strategy section. So again, negative for any interest rate sensitive sectors. And we'll look at what those are. More positive for some other sectors that benefit from higher for longer. Again, all this shows us higher for longer. So year two, again, 0.5 higher than their previous projection. Third year, it's 0.2 ahead of their previous projection, but it's still above 3%. Quarter four, steady. Longer term, instead of 2.9, we're now at 3.0. So all of these, again, show us a higher for longer rate curve. And again, in my humble opinion, we'll look at some of the sectors that is negative for. Okay, some of my comments I captured from Powell's press conference. Some of the highlights: inflation much closer to 2% goal. Housing activity is going to be weak. Again, we'll talk about the impact of this Federal Reserve interest rate decision on real estate housing. Again, in my humble opinion, it's going to be negative for the housing sector. So continued weakness in the housing sector. Not worried about the labor market as a source of inflation pressures. Projections for policy rate are higher for next year, consistent with higher inflation. So again, my humble opinion, they're seeing inflation is not coming down at the rate that they had expected or would like, but they cut anyway. So again, I think they kind of painted themselves in a corner and really shouldn't have cut this time. Again, in my humble opinion, that indicates they're probably going to hold in January and might even hold again in March. Highlight strong economy, solid labor market, progress towards 2% inflation, resilient consumer spending, more cautious approach to rate reductions, while warning against slow policy adjustments. So again, here's the indication that they're probably going to slow down their rate cuts, probably hold for a while. So again, the slope of rate cuts is going to be much shallower than the market was expected. And again, we saw that very negative reaction in the market on Wednesday and Thursday. Yes, and uncertainty around inflation is higher. So again, if they're seeing the risk, last time he said the risk was more balanced between inflation and the job market. Now they're saying the risk is higher in inflation. So, why did they cut? Again, painted themselves in a corner, had to cut. That's not good for inflation. So he's confident on the path to 2% inflation, but it might take a year or two to get to 2%. So again, we can expect higher inflation for several more years. Again, negative. So let me know. Welcome, MD. Thank you for joining us. Hope you're doing well. Let me hear your feedback on, what did you take from the Federal Reserve interest rate decision? Powell's comments, etc. I think this is all negative from where the market was expecting. In my humble opinion, I expect further downside going forward from that decision. Thursday, we got jobless claims data, GDP data, etc. And initial claims less than expected. So again, not showing weakness in the job market. Continuing claims less than expected. Again, job market is resilient right now. Corporate profits down, again, negative for stocks. GDP very positive, and I think they revised the last reading up. So GDP 3%, so no risk of recession. People talking about an upcoming recession. I think that's erroneous. I don't think we're going to see a recession anytime soon unless something dramatic happens. PCE prices in line. Real consumer spending positive, better than expected. So again, we continue to see the consumer spend, as Paul pointed out too. And Friday was December options expiration, also a quad witching day. I guess they had a record number of options expiring on Friday. We expected more volatility, although as we'll see, the VIX actually retraced quite dramatically on Friday. Also got more PCE data, so core PCE, Fed's preferred measure of inflation, a little better than expected. So 0.1 versus 0.2, year on year, 2.4 versus 2.5. Personal income less than expected, spending less than expected. Then we also got Michigan sentiment. So 1 year inflation, a little better than expected, but still far above their 2% target. 5 years still about at 3%. So again, still far above the Fed's 2% target. Sentiment in line. Expectations a little better, but current conditions degraded. So again, not positive. Again, in my humble opinion, all this data says inflation not coming down as quickly as the Fed would like. Job markets continues to be resilient, so the Fed should hold higher for longer. So I expect interest rates to stay higher for longer for quite some time. And again, we'll talk about how we can make money trading in that higher for longer environment and how we can avoid risks in that environment. Just a quick reminder, the markets are going to close at 1 p.m. Eastern time on Tuesday for Christmas Eve. Also Tuesday is the technical first day of the potential Santa Claus rally. So Santa Claus rally is the last 5 trading days of the current year, first 2 trading days of next year. So first day will be Christmas Eve day. Last day, I think, is the 3rd of January. Or Wednesday, markets are closed for Christmas. Hope you all enjoy your Christmas holiday. Take a nice break. Talked about what to do during holidays. Got a video on that. And the next FOMC meeting is not till the end of January, so we've got quite a period of time for the market to correct given the new trajectory of interest rates. So let's look at the rest of the data from last week, upcoming data for next week. Zoom a little bit more. Okay, hopefully that's more legible. So bond auctions, pretty good. Earlier in the week, retail sales, generally positive, so better than expected for November. Core, though weaker. Industrial production, weak. Manufacturing, weak. Housing, again, weak. GDP, again, positive 3.1. Crude oil stocks down more than expected, although again, we saw oil prices drop. Mortgage rates up, and we expect mortgage rates to stay high. Again, very negative for the housing market. The shallower trajectory of rate cuts. Again, so mortgage rates are going to stay high. Housing market's going to continue to be weak. Building permits were up. Housing starts less than expected. Again, oil inventories down more than expected. Well, not down more than expected, but again, we saw oil prices drop. Talked about the Fed interest rate decision, their projections going forward. Talked about jobless claims and GDP and Michigan sentiment. Natural gas storage down a little more than expected, and we did see an upturn in natural gas prices. Talked about PCE. Now we've got all the Fed officials right after the meeting. They start coming out on CNBC, etc., talk about why they decided to cut. And I think we'll see more telegraphing that they're going to hold for longer. Talked about PCE, real consumption, and Michigan sentiment. Baker Hughes bumped up 1, oil rigs up 1. Total rig count steady. So again, we just see that oscillation of oil prices right around 70. Let's look at next week real quickly. So Monday, just some bond auctions. Tuesday, we got housing data, probably going to be weak. Core durable goods, again, probably going to be a little weak. Housing, I expect a little weak. And Wednesday, again, Tuesday markets close at 1. Wednesday markets are closed. Again, lighter volume week, I believe. Again, a lot of people have probably gone already. So it'll probably have lighter volume, but it could spur volatility just due to less participation, less liquidity. Thursday, we get jobless claims data. And Friday, not a whole lot. Retail inventories, rig counts, etc. See if we've got any earnings left. Should be wrapping up. Also, I believe I heard that they're in their quiet period for buybacks. So companies won't be buying back stock, I believe. So those with the huge buybacks won't have that level of support. Got some gold companies, apparel, and not a whole lot. So Eaton, not a whole lot of earnings. So we'll have a little bit of a quiet period on earnings, and then we'll start all over again. Okay. Grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get up to 40 free fractional shares of stock, each worth $3,000 to $3,000 by funding your account with at least $2,000. Under $2,000, you get 20 free fractional shares of stock. Also, Webull has recently started 24-hour trading, so you can find more information about 24-hour trading in Webull. We have a link to the previous video, also this topic in our Discord. So if you want to trade 24 hours, 5 days a week, you can do that now on Webull. Again, if you join Webull with our affiliate link, you can get your 40 free fractional shares of stock, any other promotions, bonus interest, etc. they're currently offering, and also help support our BeachBum trading community, all of which we greatly appreciate. So I'm using the online browser market screen So we see Friday rebound, many more advancers than decliners, about 2 to 1, but most of the advancers was very small. This net inflow was pretty interesting. So the NASDAQ, very strong inflow in the NASDAQ. So that's, the bounce in technology and biotech, etc. Again, my humble opinion, the buy the dip on the Mag 7s, again, window dressing the Mag 7s. Everybody wants to have the Mag 7s on their in their holdings for the end of the year, and we have had pretty good inflow in the NYSE, but again, very strong in the NASDAQ. And again, I think a lot of people, bought up the Mag 7s, etc., and then maybe leaving for the year. Not a whole lot of change in the treasuries on Friday, so the 1-year just up a little bit. 2-year just up a little bit, and the 10-year just down a little bit. So again, pretty flat on Friday, although we saw those dramatic moves after the Fed interest rate decision. See, we're now slightly in fear. So we went from exuberant, greedy on the 3rd and 4th, down to neutral last week, and now we're slightly in fear. So we'll see if we get get into extreme fear. Did get that rebound on Friday, so bottomed on Thursday at 27. So again, we'll see if that slide continues going forward. And you can see the near-term earnings calendar and the calendar widget in Webull. Again, not a whole lot of earnings left. Let's look at the best performing industries for the week. So for the week, let's see, not a whole lot of positivity, a little bit in transports, textiles pretty negative, defense pretty split, utilities a few positives, semiconductors a little positive, retail a little positive, but generally, mostly negative for the week. Got the ETFs for Friday. So up on the Dow, again, we're seeing that bounce. So up on pretty much the Dow, the S&P, the Russell from Friday. So up on the Dow, up on the S&P, up on the NASDAQ, down on the VIX. Again, saw a pretty dramatic retracement in the VIX that we'll see. I think that's up on the Euro, up on the Russell. Pretty much all green from Friday. A little weakness in industrials, energy, real estate. A little weakness in defensives, basic materials generally weak. Looks like copper. Commodities positive, natural gas, gold. Looks like small gold miners. We'll look at the foreign currencies and the futures. Let's look at the futures. Reminder, you can also trade futures now in Webull. You can find more information about futures trading in Webull in the discussion topic in our Discord. So again, we see that dramatic negative reaction to the December Federal Reserve interest rate decision. And a bounce back on Friday, although again, we see these are kind of broad dojis. So even though we had a strong rebound, we got some retracement of that positive bounce in all of the indices. And again, in my humble opinion, that shows some weakness, although we do have that support. Although again, some more downside potential in the Dow, down to that 4,200, 42,000 level. Similarly, you see the S&P wick down to that previous low, bounce back up. NASDAQ almost got to 2100, wick down, bounced back up, and ended up pretty flat. So again, these are almost indecisions. So again, potential watch, could get some further downslide back to those November lows. Get very dramatic on the Russell. Small caps very sensitive to interest rates, very negative for the small caps. For the Russells, didn't quite make it down to that 2200 level, although it looks like it wicked down almost there. So again, more downside potential in the Russell, although it did try to bounce similarly on Friday. Nikkei's just been oscillating. Euro stocks rolled over. DAX finally rolled over. The German DAX finally rolled over. And we see a dramatic spike in the VIX for Wednesday, Thursday, right after that interest rate decision, and then a very strong correction back on Friday. So it dropped pretty precipitously. Looks like it just wicked up to the previous high and then dramatically corrected. So let's look at the term structure on the VIX as well. So a reminder, you can find the VIX term structure tool in the link section on our homepage. Homepage is beachbumtrading.com. Bum without the U. Go down and find the VIX term structure. So we see currently it's about 1836, a little above the January futures. So it did spike up and come back down. Now we see a pretty steep trend upward in the 18s. So this was pretty volatile during those 3 days after the Fed interest rate decision. Again, we see upwardly trending volatility going forward. It was up in the 25s, maybe 27 at one point. Look at the history. So again, trending up, but still significantly below the VIX future term structure. So again, we got that strong correction, any additional turmoil. And in my humble opinion, the VIX probably should have been higher, even though the markets balance. Those plus 1% levels of volatility probably should have had the VIX up. So again, upwardly trending volatility, good for options. And we see oil just kind of oscillating around that 70 level, bounced up to about that previous high, just below 72, corrected, bounced back up, just broke down below 70. So we'll see if we get that test of the previous low. Again, if so, I'd like to scoop up a block of USOI, which is a monthly dividend payer on oil. Natural gas again trending up, had a strong upward trend. We'll see if we can, finally broke that 350 level. Looks like got resistance at 375. Might get some correction. Long-term trend is up. Again, you can find the ETFs in our ETF Google sheet. Oil long, gold short, UNL, UNG long. Again, gold finally broke down. See, it has a strong support and resistance at the 50 levels. So just broke above 2750, broke down below 2700, tested 2600, bounce. Was talking to Crow, the Crow in one of the chats, and we kind of thought we might get a bounce off that 2600. Again, you can find ETFs to trade long, short gold like GDXD short, GDXU long, and silver down to about 28, bounced. Again, resistance at 30. That's at 30, gets rejected. More downside in silver. Similarly, copper. We saw the ETF weakness in copper. All the metals are somewhat relatively down, but not near like 52-week lows or so. Silver's still got significant downside longer term. Some of the ag products up, but then some significantly down, like rice, oats, wheat trending down. Again, I've got alerts set, and we're watching for a swing back up in wheat using a WEAT. So that's in our shopping list stocks, and I'm just waiting for a bottom swing in wheat. We'll probably take that WEAT ETF again. Again, you can find that in our ETFs Google Sheet as well. Welcome, Sydney Osborne. Thank you for joining us. Hope you had a great trading week. It's like coffee finally peaked out, sugar trending back down. Then again, we see these dramatic moves in the bonds, bond prices. So yields spiked up, prices spiked down on that Federal Reserve interest rate decision. In my humble opinion, this is considerably overdone because I think we're actually even below um, when they made the first cut in August. So if I just zoom this out a little bit, so here's, yeah, we're below when they started cutting, when the Fed started cutting. So yields are probably higher than, again, when they started cutting, and they've cut a full point since then. But bond prices, yields are higher, bond prices are lower. So I expect a correction, longer term correction back up in bond prices, down in bond yields. And as you'll see tomorrow, we added to our position to TMF. We take TLT, or again, we have other ETFs for longing and shorting bonds in our ETFs Google Sheet. So again, I think that correction in the bonds is overdone. So I expect a correction to the upside. And we saw a little bit of stabilization on Friday. Dollar up, got some added strength, trending upward, corrected a little bit on Friday. So most of the other foreign currencies pretty weak. Yen looks like it tested its previous bottom before the first BOJ interest rate hike. Now the BOJ, Bank of Japan, also had their decision. They decided not to increase interest rates at this time. So we didn't get that unravel happening now. I think they have another decision in January. So the yen might stay low until that next interest rate increase on the BOJ, probably in January. So I hope that all helps. Okay, I'm going to skip forward on ETFs, and let's do our strategies for this week. And then we can come back to ETFs and with as much time as we have left. So we grab a drink and we'll talk about our strategies. We'll look about how do we make money trading the December 2024 federal interest rate decision. Okay, again, our theme for this week is how do we make money trading that December 2024 federal interest rate decision. So firstly, I want to go look at the new dot plot, a new trajectory for Fed interest rates in the FedWatch, CME FedWatch tool, where we can see the dot plot. If you need more help with how to use the CME FedWatch tool, we have a whole video on how to use the CME FedWatch tool. You can access that via the link in the notes. See, now the clock's to the next meeting, end of January. Not sure why it's not loading properly. It's just slow, I guess. So we looked at the probabilities last week. Now we can see for January, probability is mostly hold, 91% hold. Look at March. Now it's about 50-50, hold versus one cut. My humble opinion, they're probably going to hold for longer, given the current trajectory. I'm going to look at the dot plot. You can look at the chart for the dots. Again, they pretty much moved up, so interest rates not trending down as quickly as previously projected. It's not responding very well. Go. See if we can get the chart up. Okay, so here's the actual dot plot from the Feds. You can see the median expectation, again, a much shallower projection of rate cuts. So you can see the majority, and again, the median. I think it's much easier to see in the table. So now in 2024, the majority says we're going to end at about 4.3738, so much less than before. So only about 2 cuts more in 2020 going forward. So by 2025, we'll be 388. So again, 2 cuts below where we're currently at. 2026 looks much broader spread out. So highest majority 337. So another 2 cuts in 2026. And then by the end of 2027, about still above 3%. Longer term, pretty split between 3% and 287. So again, higher for longer. So I hope that all helps. Also, you can find the links to the CME Fed Watch tool in the links section of our homepage. So how do we make money trading this Federal Reserve interest rate decision? We previously had several discussions on how to make money trading when they start cutting. So if we look at the positives and negatives for cuts, I've got the link to our previous discussion on Fed rate cuts in the notes document, the notes for this week. So if we go and we look at, okay, what's good for Okay, so this was based on a previous question from the yacht insurance guy. And so we had this discussion that cutting rates is good for these sectors. So the slower pace of rate cuts is going to be negative for these sectors. So bonds, and we saw that dramatic negative reaction in bonds. Housing market, again, very negative for the housing market, real estate in general. Again, in my humble opinion, also commercial real estate. I think we're going to see more distress in the commercial real estate sector due to this slower pace of rate cuts. Again, they were probably, hoping that they'd be able to refinance at a lower rate and get out from under some of these bad mortgages, etc., both in housing and all kinds of real estate. So again, very negative for real estate in general. Anything that's financed, so again, very negative for solar, autos, anything you have to finance, those rates are still going to stay high. Again, very negative for housing. I think people that were waiting for mortgage rates to come down to buy a house, they're probably not going to buy. And people in existing homes are not going to put them up for sale. Because they can't get a mortgage at a rate that's lower than what they currently have or even close to what they currently have. And utilities generally negative for utility stock, again, negative for growth stocks. So again, your ARKs, your growth stocks, again, negative for small caps, the Russell, IWM, very negative for biotechs. And again, I think a number of these companies probably hoping to be able to refinance their debt at a lower rate. in the near future, and those hopes are going to be dashed. I think we're going to see more bankruptcies. We already saw somebody pointed out Party City, Big Lots, etc. I think we're going to see more distressed zombie companies going under. Again, biotechs, very sensitive to debt financing. Things that it's good for is fixed income. So bond yields are going to be higher, so buy bonds. The bond rate's now currently above the money market rate. So again, this slower rate cuts is good for fixed income and generally good for defensive stocks. So even though we saw that correction in defensives, this slower rate will be better for defensive stocks. So again, we've got several other videos on when interest rates rise. Although we don't have interest rates rising, we do have slower rate of cuts. And again, we've got a series of videos. There's two parts that we discussed this previously about how to make money when the Fed cuts rates. So since we've got a slower rate, these slower rate of cuts is actually negative for the sectors for which rate cuts are good, and positive for sectors for which rate cuts are bad. And we saw this in the initial reaction Wednesday and Thursday in the markets, and again, a correction on Friday. But again, my humble opinion, as the market digests the slower rate of rate cuts, I think we're going to see more downside in these sectors and more upside in these sectors. So opportunities to make money trading this Federal Reserve interest rate decision for December 2024 and going forward. Again, we can refer back to our list of in our previous notes on the sectors that rate cuts are good and bad for, and make money trading based on that discussion. So please let me know what you think. What other sectors may be hurt or helped by the current Federal Reserve interest rate decision, future decisions, what we saw probably going to hold in January. So again, we've got several months where this decision will be predominant in the market. So hope that all helps. And please, again, let me know your thoughts, other sectors, other ideas, trade ideas for making money trading this December 2024 Fed interest rate decision. Okay, I'll jump back up to ETFs. Let me grab a drink, and I've got some that I want to cover, but if anyone has a particular topic, index, commodity, etc., for which you want to look at ETFs, please throw those up in the chat. We can try to take a look at those very quickly. Okay, just a quick reminder, as we identify our trading strategies, trade ideas, based on our market analysis, etc. And be it a long idea or a short idea, we can then jump to our ETF Google sheet and find ETFs that we can trade using that long or short trade idea. And you can gain 24/7 access to our ETFs Google sheet. So you can do likewise, find an ETF to trade your trade idea in our ETFs Google sheet. And you can, again, gain 24/7 access to our ETFs Google sheet as well as our other Google sheets, etc., by joining our Patreon. Got a number of additions to our research sheet. RT mentioned in the live chat of last week's part 2. These are all momentum. Last week we we continued a discussion of trend following and momentum ETFs. So you can go back from last week, see some other trend following momentum ETFs we discussed recently. And he identified a whole series of additional momentum ETFs, a whole set for small caps, and then a couple for mid caps. So again, thank you, RT, for finding and sharing those with our BeachBum trading community. So I put those all into our research sheet for our ETFs Google sheet. Not going to go over them in detail today, but I wanted to point them out. So again, you can find them currently at the bottom, or they're all in the momentum category. And I've categorized them as momentum either small cap or momentum mid cap. So you can compare their risk reward profiles for 52 weeks. We want to look at just the small caps. You see probably this XSMO has the best risk reward profile from a 32 week, or maybe this DWAS from a top to bottom. DWAS is pretty good. XSMO is pretty good. Look at the support. Some of these are relatively new. Some of them are larger, have more volatility, more AUM than others. So risk reward profile, again, XSMO, DWAS seem to be the best, and not huge, even 52 week, not a lot of risk reward profile or benefit. Now from small caps, this XMMO has a 1.57 for 52 week, a little bit less support and resistance, but it's got an 8 from bottom to top. And you can again see the current risk reward for each of these. So this EEMO is pretty close to a support level. So if you want to try that one, not a huge risk reward profile. Also, you can look at the FinViz profiles for each of them. Again, I'd recommend you look at the holdings, the AUM, the relative volume. Some of them might be pretty lightly traded. Again, these are all small cap momentums or mid cap momentums. So I would look at the holdings and also their profiles, expense ratio, etc. You can also look at the profiles in the ETF database, and the ETF database link, and MIS profiles. Again, I didn't fill in the optionality, just wanted to share those with you. Again, you can use our research sheet, pick whatever small cap momentum or mid cap momentum that you'd like to try to trade. These are all longs. If anyone knows of a short on small cap momentum or mid cap momentum, I think that would be very helpful. Again, we do have some shorts on the Russell and on small caps that we can look at very quickly. If we look at the Russell, we were watching SRTY, which is the short on the Russell. Congratulations to anyone that caught that dramatic downturn in the Russell with SRTY, played the bounce with URTY. We also have small caps, so you can short. You could have caught the downturn with TZA, catch the bounce with TNA. So again, I hope that all helps. Again, thank you, RT, for sharing those. If anyone else has any, again, short on mid cap, small cap momentum, we'll add those to our ETFs Google Sheet as well. So just very quickly, to go over some of the sectors, positive, negative, from the December interest rate decision. We talked about growth stocks. So congratulations to anyone that caught the downturn in SARK, downturn in ARK-K with SARK. Again, you can play the bounce with ARK-K, LabU, and LabD for biotech. So again, quick downturn, a little bit of a bounce in biotechs. So you can trade that with LabU, LabD. And we talked about Brazil did have a little bit of a bounce, but it turning down. Again, no catalyst for MJ. There is a dividend. So if you want to play that longer term for dividend, volatility in China, yin and yang. We're watching BDRY. It did pop up a little bit. Swing and dry bulk shipping. Have a video on that as well. Again, you can trade the FANGs. That's, again, my humble opinion. I think they're going to keep buying the dip on the Mag 7s, the FANGs. Also got window dressing towards the end of the year. All your money managers, fund managers want to have NVIDIA and Mag 7s in their holdings. We may, again, my humble opinion, might see profit taking early next year. So, but if you want to trade the short-term volatility in the FANGs, FANG U long, FANG D short. Also Mag S long for the Mag 7. Again, gold, got several longs and shorts. We tend to use GDXD short, GDXU long. Look at treasuries too. Again, there's another momentum long. Got individual stocks, long and short. You can find a variety of individual stock ETFs in our Google Sheet, long or short. Oil, long, short drip. Monthly dividend payer, USOY. Watching the housing and real estate to see if they come back down. Also REITs, maybe some opportunities, but it might be a couple months. Again, the Russell short with SRTY, long with URTY. Semiconductors short with SOX L or short with SOX S, long SOX L, silver long AGQ, short ZSL. Talked about small caps, treasuries. So again, we've got a variety of ETFs. You can trade treasuries, long TLT or long TMF for the 20 plus year, long 7 to 10s, zero coupons, or get short the 20-year TBT. So you can trade that volatility with some of these leveraged ETFs that you can identify in our ETF Google Sheet. Can watch and see if uranium comes back down. Get volatility, we got that spike and then quick retracement. I've got some plays I'm looking at on SVXY and SVOL. So I talk about those a little bit more tomorrow. So when we do get those spikes, the VIX is going to correct, retrace back down eventually, and to take advantage. So congratulations to anyone who made money on that spike up and then quick retracement in the volatility with these ETFs. We're watching wheat, see where the wheat futures bottom. And again, the yen's pretty low, so risk reward profile short term on the yen's not huge, 1.4. But if you want to trade that swing back up in the yen, YCL or FXY, want to trade it short, YCS. So I hope that all helps. Also, just FYI, we've discussed before, but if you're trading foreign currencies, you want to find some other foreign currency ETFs. I've got quite a few in our ETF DB sheet. So again, you can do a find if you're searching for an ETF to trade various foreign currencies. You can find some of those in the ETF database sheet. So I didn't see a whole lot. I think there's the Swiss has a pretty good risk reward. Bitcoin. Currency Harvest Fund. I think Easy Mike was asking about the yuan, Chinese yuan, so you can find an ETF on that. Doesn't look that exciting right now. So again, I hope that all helps. I'm just going to quickly look at the chat and see if there's any other topics, ETFs you guys want to take a look at. Transportation. I've got a few transportation. Also, there's jets for airlines, and we talked about several others for airlines. So you see IYT, so up a little bit. TPOR getting up a little bit. The risk reward currently is not too bad. So you're looking at transport, so you've got travel and vacation. Also got some others in our research sheet for both airlines, and so we've got Jet U and Jet D, trade airlines up and down. We also have some auto industry. So again, is negative for cars, so negative for the auto industry. A lot of negatives for the auto industry right now, but it's still relatively high. So we've got car U, car D. So maybe a car D play might be attractive. I hope that all helps. So if you have any other ETFs that you would like us to do research on, please let us know. Put in the comments to this video in our Discord. Tag us in our Discord. We're BeachBum Trading, all lowercase, other characters, symbols, etc. Anyone else is an imposter, please ignore and report them. But let us know if there's any other ETFs you want us to take a look at. Add to our ETFs Google Sheet. We'll also have a whole playlist of videos looking at a variety of ETFs that you can access via our ETFs playlist. Also talked about how to make money trading in December. So we've got links to all those videos about the wash sale, tax loss harvesting. Again, we should be wrapping up. If it's not, the majority of the tax loss harvesting is probably all wrapped up. We might see a little bit towards the end of the year, again, because of the wash sale. So if you're not familiar with that, you can access that video. And then we'll start talking about more about the Santa Claus rally. So you can hear more about if the Santa Claus rally is real. And now we're transitioning into the winter. I believe today is the first official day of winter. And so I put the links to how to make money trading in the winter, how the markets typically perform in the winter, and best performing sectors and industries in the notes. So again, we'll talk about that further, but you can access those previous videos in the notes as well. So we'd also love your feedback on what we can do to continue to improve our weekly trading game plans, our tools and resources, our ETFs and other Google Sheets, also our community. We need your feedback on what we can do to continue to add more value for all of our BeachBum traders. We hope that you like this content. Please do us a favor and smash the like button. Help us try to get the YouTube algorithm to give us some love someday. Share our content with more traders. We really need and appreciate your help with directly sharing our content, reposting our content on your social media sites, inviting fellow traders to join us in the live streams, join us in our Discord, etc. Let's continue to work together to grow our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. So thank you to everyone that joined us in the live chat, everyone that's watching after the fact, for part one of our weekly trading game plan for this week. Tomorrow we'll take all these trade ideas, all this market analysis, etc., and we'll use it to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers and several option strategies to also generate income while we wait for swing trading stocks to set up. So we hope you'll all join us again tomorrow, 10 a.m. on Sundays for part two of our weekly trading game plan for this trading week. And if we don't see you tomorrow, we want to wish you a very happy Christmas, very Merry Christmas, happy holidays, etc. But again, hopefully we'll see you tomorrow. We can wish you happy Christmas, Merry Christmas again. So thank you again and have a great day.